Hey, what's going on, guys? It's your boy MC Fire. Happy to be here. Happy to see you guys. Thank you again for joining us on this recap. We're definitely going to be talking about what we had for this week, what's going on for the rest of the week, and talk about last week. Last week was a little busy. We have some good news coming up to you on why last week was busy. But if anyone who's tuning in with us for the first time, this channel is definitely dedicated about stock trading, growing, and anything that's tapping into your spiritual purpose, financial purpose, really in particular to chasing fire. That is financially independent, retired early. And me and Q, are definitely looking to do that ASAP pronto. We're working hard for that. We've sacrificed for that, and we're not going to stop until we get it. So, but today we want to talk about some of our plays that we have and some things that are coming up here in the market. So let's dive right in. So out the gate, we told you guys that we're super excited about something that we were looking to acquire. You know, they say CEOs look at systems, and so for us, one of the systems that adds like a lot of bang for the buck was this new program that we've found called Qualcomm or Qualtrim, excuse me. So used to trading Qualcomm, but it is Qualtrim. So shout out to the maker for Qualtrim. I might actually link it because it is a very, very good system. We just kind of purchased it, but we were attracted to the basics, right, of understanding that certain fundamentals are necessary to evaluate yay or nay for good stock. Warren Buffett, one of the arguably one of the best investors of our time, uses certain things like free cash flow, growth in dividends, PE ratios to determine is something a good stock or not. Those things, if you could narrow all those things and put them in one app on what he would look, it would look something like this. So, out the gate, we just kind of glossing over it, and the maker, did a really good job at making this app. Definitely is inspiring me and Q to develop things of our own, which we already have. But we are going to break that out when Q's here. So, one thing you guys want to note is here, yeah, it has price, revenue, EBITDA for anybody who's in business and knows what that is. I know that's an important number, but I don't exactly know what it means. Free cash flow, definitely very important. What I like also is you can see debt to income. So you have cash on hand, right? Cash is an asset, and you have debt, and you can X out capital lease. So that might necessarily be debt that's attached to your building or operating costs. And then let's say debt that's attached to marketing. So you could say, hey, how much of this debt is actually debt that they can get rid of or not? As you can notice, we have one of our crowd favorites, Qualcomm, or Palantir pulled up. Qualcomm on the brain, but Palantir pulled up. It doesn't have any dividends as currently, but it does have shares outstanding. Free cash flow, EBITDA, revenue, price, net income, all the good jazz laid out here. Also, if you scroll down, you can see news. So it's like a one-stop shop to see what's going on, and it's updated as much as that day. So do you have July 1st news articles for the stock? You can stay abreast on what your stock is doing, right? The employee counts, all the good stuff. There's a lot more to this. We're not kind of deep diving into Qualtrim. We're just showcasing why, like what systems are acquiring to be able to determine yay or nay for particular one-off stocks. And the price is definitely well reasonable for what the guy's asking. So as you can see, let's just take Palantir for example, and we'll hop over to the charts real quick to take a peek at Palantir. It's one of our favorites. So we do like Palantir a whole bunch. So Palantir's kind of been on the uptick, and we've been scaling into Palantir as well as we have an option on Palantir. The option currently is up 185%. So shout out to us taking and pulling the trigger. I believe we pulled the trigger here. It broke, got a buy trigger, kind of pulled back, so we took the buy there, and it's already up 185%. I really like percentages more than I like price. because let's say, for example, I believe that this game in trading is leverageable and scalable. So if you can be effective and do it 100%, if you can scale, you can get higher forms of leverage, then you should be able to accomplish that at the same level. If you can get consistently 40% and you slowly build, you slowly scale, you slowly really you're building that internal risk tolerance, you can make this a business. I really truly believe that, and that's one of the reasons why me and Q just haven't quit at this. Been learning for about 2.5 years. Q a little shorter than that, but still definitely a good look to be constantly learning and refining your craft. So out the gate, right, you can see that Qualcomm isn't an uptrend, had immaculate earnings or consistent earnings, right? And that's kind of the theme currently. But what I wanted to note on Palantir is the internals, right? You see the chart. Yes, the chart's upticking, but what gives you more conviction to hold? What is underneath the hood? This, right? If you see, right, within the quarters, quarter one of 2024, revenue has steadily been on the increase, right? That revenue is the lifeblood of any business. If you cannot generate revenue, if you cannot generate free cash flow, that's going to be a problem. Speaking of free cash flow, how's free cash flow been? Kind of steady. It has some spikes here and there, but ever since quarter three of, or excuse me, I should say, quarter quarter one of 2021, it has been positive for free cash flow. That is very important. So you've basically been multiple quarters consecutively positive, right? Any what they say recession is calculated by two consecutive down quarters in the market. So if you can have constant up quarters, that's good. Also, I know I got to do some more research, but EBITDA is an important number for any business. Don't know what it means, don't know what it does, but it is very important. Don't know how, but I've heard it several times for different people. So that's the next thing we're probably going to learn is what is EBITDA, what's factored into it. As you can just tell from the chart, it looks as though it's been negative EBITDA for a very long time. And just here recently, you're looking at quarter four of 2022. It has gone positive and it has increased by a wide margin. And quarter one being 89.32 million in quarter one versus when it first went positive only being 12. So definitely shout out to Qualtrum and shout out to Palantir. So we really like the internals as something that we continue to add to our portfolio. No, it doesn't have any dividends, but we'll be bringing more videos on some of the fundamentals on why we think certain things are going to go one way or the other, or why it would be a good thing to put in your portfolio, maybe as a way to showcase it being recession proof a little bit. Again, this isn't financial advice, but using these systems and how we choose to use them is something that we want to share kind of in a vlog format. And from watching some of the mentors that we watch kind of share some of that information. Again, none of this is financial advice, not telling you how to trade your money or what to do with your money or what to do with your investments. I'm just simply saying that, hey, what we've learned and what we've come to value and enjoy, we want to share with you guys. We will always be 100% transparent on that. Another company that we definitely like is Amazon. So when you look at it again, you can see price quarterly up, revenues kind of been trending slowly up. I mean, it is a very large company. Free cash flow, really good free cash flow, net income, right? So you see here, but this is the kind of stuff you would want to know, right? They cut dividends, and might be a reason you can learn something. Why did you cut dividends in quarter three of 2021? Was it COVID? What was it? Was it you were trying to give back to the community? What was the reason? So all of these things kind of are super important. But us diving into more of the fundamentals aspect is just going to make us a more well-rounded investor overall. Most people buy things because maybe their friend told them to buy them or they read it in an article. But if you ask them, hey, what's the hard data points that you go by? That is gives you a fundamental edge. Like Buffett, most people couldn't do it. Even we couldn't do it at times. But that is something we're going to learn and know and getting the right systems to be able to differentiate that is good. So with this, right, there also is an aspect where you can build your own watch list and kind of track the things in your watch list, as well as build out, we haven't done these obviously because it's new, but build out your portfolio, which you actually have, and then track that based off of dividend yields, estimated annual income, current value, holdings, all that good stuff. It's like its own asset tracker. Really cool stuff. I like that. Shout out to the maker. So you can kind of see all that data and pull it all in one spot to see if you have a keen insight and you've got the flow of the market. We've been looking at some other stuff like Chevron. We'll take a look at that. Whereas you can see massive dividend investors kind of been keeping his dividend slowly on the uptick. But something you'd like to note here is, let's say cash to debt, right? How's your assets looking versus your liabilities? And really in particular cash. So let's say if we get rid of this and we just take a peek at cash, you can see cash has been kind of up and down. But when you throw in there, let's just say not even capital lease, just debt, right? Debt has slowly been increasing. It has had these like little peaks here. We don't know why. That's something we can necessarily research. Why debt started to increase, pull off, and then increase again. But this is not kind of what you want to see when you're looking necessarily into businesses to buy long term. How are you going to survive if you your debts continue to grow, but your cash on hand doesn't necessarily, unless your revenues are also increasing? Let's go take a look at that. Are the revenues increasing? No, they're not, kind of staying flat. So you're increasing debt, can't increase revenues out the gate. So seeing that free cash flow also, is your free cash flow available? Well, clearly not. You're taking on debt for a reason. Does that mean the company's in trouble? Does that mean that really for us it just means maybe there's something better out there for us to look at as it regards to something you want to throw in your portfolio? Basically finding good companies with strong bones, strong structures, right? So we really excited about this. We're going to definitely bring you a lot more content as regards to that. Coming to the charts though, some really good trades in Palantir, right? Some not so good trades in Wells Fargo, or not Wells Fargo, XLF. Let's see, pull it up here. Wow. Right. So again, 100% transparency with us. We always like to keep things real in this channel. Things work, cool. If they don't, cool. And we modify the strategy accordingly, right? So we got a weekly buy trigger almost literally at the peak. When you look at this, it's like this arrow is basically bought in. It came up, broke this level, felt pretty confident that it was like going to retest this level and keep pushing. Didn't do that, and has been since trailing our expectations from there. So still it's found some support here. Can it hold that support? That's anyone's guess, but the reality is you did have a couple spikes. It is making higher highs and higher lows in the last 4 days, but the reality is we have this play for approximately 3 weeks. Not exactly what you want to see at the gate. So it almost, as soon as you buy, it goes against you. Don't worry, the market's not out to get us, but we are kind of in hot water there. You also have, we can go to our monitors tab and actually pull up what we have. So we've got new Wells Fargo, XLF, and that's pretty much it. So let's go to Wells Fargo, WFC. Relatively a newer trade. It's more in tandem with the theme of the XLF, and then we'll pull that up for you guys really quick, of why we feel like the XLF has some potential. Guys, so out the gate, this is basically going to tell us why necessarily I felt comfortable taking an XLF trade, as well as some of the things inside of XLF, right? As you can see, there's a lot of green here, a lot of double green: Berkshire Hathaway, JP Morgan, you have Bank of America, and Wells Fargo. So nice little dip buy on Wells Fargo. You also have Goldman Sachs in the mix. Most of these are in their upper third to range highs. What does that mean? That means, let's say for example, we open up here, so you can see it, Goldman Sachs, right? Between this high and where it's in the upper third of a pivot range, right? So if you say, okay, from high to low, and you divide it up into thirds. Here's 1/3, here's 2/3, there's 3/3. So from here to here, 1/3, from here to here, 2/3, and from here to here, 3/3. This pullback is what I would say is an acceptable pullback for possibly a continuation. Okay. So the beautiful part about that is if it pulls back within that range, it's still acceptable to be a credible play to the upside. Might take a while, maybe take a few quarters or months, but if you're buying and holding, or even if you've got 3-week options, they could play in your favor to the upside for a number of weeks to net you a good profit, right? This one necessarily, I would, because it's been in this choppy range, would look for a break above that level. Break, retest, kind of what we were expecting to see with Wells Fargo. I would definitely see it as hot water if it got below this level for sure. So I like what's in the XLF a lot, because again, from pivot high to pivot low, it's in the top 1/3 there. You have American Express, same thing. So things really poised to look like it wants to push, but again, a little late too. You just keep clicking through here and you'll see that most things are in their upper 1/3 when it comes to the push. So Wells Fargo, the one that we took, that actually is in the same boat, and it actually did start pushing to the upside so far, giving us a nice out the gate push. That's kind of what you want to see out the gate. You don't want it to be like XLF where it's immediately going against you. It's not, doesn't mean we're out the gate here to a good start. It doesn't mean that the play's over, but it does mean that out the gate, not what you want to see. So WFC, Wells Fargo, is pushing, right? And with the weekly, you already have like 1 day of strong buying, aftermarket buying, the next day strong buying, and this day strong buying. So we can go over to, let's say, Palantir, or let's go to Qualtrim here and see if there is maybe some news out in the last few days for Wells Fargo. Let's take a quick peek at that. Right, let's see. And this is what this is going to be kind of good for is, hey, what's going on? What's the news, right? Wells Fargo's management near-term risk and meaningful flow. Banks boost dividends after passing stress test. So, what day is this? This is the first. Okay. Yeah, so the Thursday, basically. So if we're looking at Thursday's price action. It's Monday. Yeah. So there might be the dividend news might be the reason why it's rallying currently. That could be my guess. Top banks hike dividends, right? Top U.S. banks hike dividends after sailing through Fed stress tests. Speaking of, let's go take a look at that. The Fed's stress test coming up in the CME, which is their Fed Watch tool, basically going to tell you what's going on. Is the Fed planning on hiking rates? What are the analyst estimates for? Is the Fed actually going to hike at least one time this year? And the market is anticipating that hike, or that price cut, not hike. So as you can see, the current target rate is 5.25 to 5.5, and it's estimated to stay that way for the 31st meeting of this month. So that's coming up this month, in July. At the end of the month, there will be a meeting for the probability of the target rate. That will definitely be discussed and agreed upon. Is it going to stay the same? Is it going to get cut? Nobody knows, but there is a 91% chance from the analysts saying, hey, this probably will remain the same, right? Now, September different look, right? The current range is 5.25 to 5.5. So there's more people saying that, hey, it will get cut in September. Remember, the Fed said it's going to at least cut like 2 to 3 times this year, and we're already in July, and the Fed hasn't made one single cut. So the more it goes throughout the year, the more people are anticipating that the Fed will cut eventually. Okay. In near-term news this week, right? So coming up, we have the JOLTS job opening, and Fed Chair Powell is speaking tomorrow. So if you're a trader, what does that mean? Whenever this man speaks, he's basically the financial president. So if you're looking for a play, just keep in mind that the market will be very volatile. It can be volatile to the upside, it could be volatile to the downside. Nobody really knows, but just brace for anything. If you can't necessarily plan for the prospect of high volatility, I would say don't trade. Don't even look at the charts that day. Just sit this one out. But if you kind of have a plan and a strategy that's geared towards high volatility, then this probably could be the day for you. Then you have unemployment claims. On Wednesday, you also are pushing some other things in the European market. Parliamentary elections are coming up, so if you're trading a JPY or the British pound, essentially, you could watch out for that. That could have some volatility for you guys. And then towards the average hourly earnings, I would say we don't know what that is going to be, but hopefully what the consumer index really told us about the market is that in America, people are really hurting when it comes to their savings and dipping into their 401ks and stuff like that. COVID really did a number on people, and then when people got out, they really just wanted to get out, see the world, and travel, right? So what they really did is they did all that on their credit card. They did a lot of that purchasing with money that they didn't have, basically pulling from their future earnings to spend today. And if they didn't spend it on assets, it won't generate them necessarily a future return unless they make some changes there. So that's kind of what if you're looking at the underlying, what people have been saying online and what the consumer price index is saying is people are struggling, having a harder time covering emergency expenses, right? Also, you have for the bar charts going on, info and tech has gone its pepper has kind of started pushing back to the upside. SPY is steadily increasing though, so the age old mantra of buying the market on a dip and expecting it to continue to go up at 5 to 7%, I would say that's pretty well founded. If you're looking to beat the market, a good place to look is things that are beating the market. And what do I mean? This is why I love this chart. You can tell which sectors beat the market are on par to continue to beating the market, right? Info and tech, not consumer services, comm services, have been consistently pushing above the market. And I mean consistently for a hot minute. Here there was some time when the financials were actually pushing above it. So if the financials can get back above it, awesome. I will say that most rallies in the market are accompanied by those three ETFs anyway. So if those sectors are pushing, like info and tech, communication services, as well as financials, man, you're going to have a pretty juicy rally on the Qs and the SPY for the day. If those three aren't pushing, then I wouldn't expect to see a rally on that day. Could be like a mixed bag kind of thing. So that's really the news we've got. Now to take a look at some plays, right? So yeah, Wells Fargo, pretty good look. And when you look at like basically how that came out on the day, it's a lot better than XLF. We'll hope it holds, but the reality is it's been a steady, like after this initial buy, it's just been a steady buying, a lot of buying pressure from there. So hitting highs of around 60, 68, at least pivot highs. And seeing that, and then we took the buy. It's basically off a weekly buy. We're looking to hold that for the next 3 weeks. Not in range or in danger at all of its 3 ATR, but how's the trend looking? We've got a uptrending unbalanced volume, uptrending a 21 period moving average. Currently, price is above the 1 ATR or half ATR range. So that's good, because if you look back a little bit, once it kind of pushed above there, it could potentially pull a number like this, or even just kind of slowly grind up. That's what we're looking for from a pullback like that. So once it gets in that upper range, we like to say that it's in a strong uptrend, and we prioritize strong uptrends. That's kind of why we took the play after the pullback. So we don't have to be perfect and buy like the absolute bottom, because who knows what the absolute bottom is going to be on like these higher time frames like this. But we can kind of surmise that, hey, buyers are stepping in. There's a lot more pressure. What you don't want to be is the only one buying a top and the only one buying a bottom. And that's what you'll see a lot of people do, is they'll catch a falling knife, and they don't have any data to show that, yes, the fundamentals might be there if you're looking to trade news or fundamentals, but what are the technicals? What is price actually doing to confirm your action is correct, right? Because if you want it to go up to 3 ATR, well, it probably first needs to cross the top of the previous week's candle, right? And if it doesn't do that, then how can you reasonably say, hey, I think it'll go up to 3 ATR, right? The probability of it going up there in 1 week is slim. It does happen, but it's extremely rare, right? For it to get up to 3 ATR, right, what did it have to do over here? Well, it had to cross the previous week's candle high and the 8-period moving average before 3 weeks of pushing, right? Not cherry picking this example. You can go back anywhere and you could see, like, let's just take here, for example. Let's just take anywhere, for example. For it to get up to 3 ATR, it first had to do what? It had to first cross the previous week's high in the 8-period moving average, right? Doesn't necessarily always have to get there, but if you're looking for something to make a certain action or move, there's certain preliminary triggers that must happen before you can actually say, okay, well, I want to take this trade now because of XYZ. All right. We also got a couple other major things. Let me see. Not more Palantir, not more O. What do we get? Some really cool stuff. I think it's EF. Is EF something? EFC, yeah. To look at some EFC. Right. So after a buy trigger, we did take a buy on the EFC. It did kind of start trending green for a little bit, but has since pulled back. So what the cool transparency about the channel is, not everything is going to be a winner, but for us, the acceptance is number one, how are the fundamentals? Number two, how is the accepted risk to reward, right? If the reward potentially is mid-range, and the risk is here, is that acceptable? Like, if it breaks below here, then okay, we could talk about letting it go with the potential to possibly buy it back, right? If that's the play, if that's what we believe it'll do. We expected it to start trading to the upside. It didn't do that, right? This the trend was red the whole time, and then here it goes green. We execute the play. Now, again, this is why we like to prioritize uptrends, then downtrends, then weak uptrends, then weak downtrends, then neutral trends, right? This is what we call a weak, really a neutral trend, right? The 21 period moving average is literally moving sideways. Before that, it was coming into a weak downtrend, right? Very weak down. The 21 period moving average is moving down. It has a pullback, making it a really, really, really weak uptrend. Extremely weak uptrend, because it's not being like pushed necessarily by price action breaking new highs. So because of that, we took the buy knowing that there's going to be some risk to reward there, but we took it off of, hey, we're okay with accepting this risk to a certain level, right? And that is a REIT, and we like the REIT, and it's relatively cheap, so we're okay with taking on a REIT and getting that nice juicy dividend at this price level, right? Now the question is, do they cut their dividend? Do they maintain it? That's really why we get Qualtrim, to see when they do that, why they do that, stuff like that. So we're just keeping you guys abreast on what's going on with what we're doing as regards to the vlog. Now we can look at some of the plays here, and you can see out the gate, man. We'll go down the list here. Bitcoin, nice juicy pullback for the bit of coin, right? It's threatening, like it wants to break free value and potentially either retest or break higher, right? Put an alert here to see if it would actually break to the downside and give a nice juicy buy. But now that it's in free value here, we'd be looking to see if it breaks again, or if it gives us an indication that it want to break to the upside. Either way is good. Not looking to take off the position for Bitcoin. We just like to be cognizant. If you're looking at the Qs, again, the Qs are extremely high, as you saw from the chart previously, from the bar chart. The Qs are the primary sector. A lot of things intersect that go for info and tech. So if info and tech and XLC, they're basically vying for top spot for who is rotating in and out of the market as regards to top spot there. So they are neck and neck. Who's going to win is anyone's game. But I believe if I had to take a gander, I think the XLC, they've just been a lot more consistent over the year. So the trend's your friend till it's not. But we like the Qs, definitely violent and volatile. And as we get older too, guys, not scaling necessarily into so much risk on stuff is probably not going to be our first choice. So that's something to think about there. But yeah, I got the Qs here. It did take a pre-market bounce. So if we can push, that'd be nice. Not necessarily holding my breath for that push. I will say I'm not necessarily holding my breath for that push. But yeah, this is a trade we took. I was really impressed with this trade overall, with some of the systems that we've been acquiring to make our entries better, right? We have the auto trend system that we use on the trading view for kind of day trading. It's a very simple system. We just want to get into a nice rhythm. And then we added another indicator that we have come to really love, and not just love, but emulate on Thinkorswim. So shout out to me. Shout out to Q. Excuse me. Shout out to Q, because we built our first indicator. So I'm not going to show you that today. When we're both here, she's going to actually break that down with us. But we built our first indicator, guys. Really crazy when you think about, like, it might not go anywhere. It doesn't really matter. It's that we like that we built one, and we think it'll be like one of the most effective indicators out there for gaining alpha and edge there is in the market. Like, hands down, point blank period, probably one of the best indicators for edge. Right? Refining, clearing out the noise, refining it. So I'm chomping at the bit to tell you I'm not going to show you. We're gonna wait till Q gets here, but I'm chomping at the bit for it. Pushing on here, we got SPY. Let's go to the end here, because I don't want to be. There you go. So the end. So yeah, same thing with SPY. Kind of bounced into that weekly resistance level, and it's just kind of hanging out there. I would not say that I'm like holding my breath that it will continue to push higher. Again, it's in the stratosphere. I would totally expect it to potentially move sideways, rotate between these two rotational zones. Totally be okay. What does that mean for you? Don't stop dollar cost averaging. Don't think that getting out of the market or trying to time the market is not necessarily something you could do. I would say, if you have a wish list and there's something cheaper on your wish list, definitely get that before, let's say, you jump into this the queues or the spot. That's my personal advice. It's not advice for you guys, because a lot of the things we got for the queues, we got at the perfect price. Okay, the price that we felt was risk averse, a price that we could accept. I mean, we were looking at the queues over like here, right? So it's not like we're buying into the queues back here. So if you're thinking like, oh, okay, and even back here. So if you're thinking that up here, we're not even looking at the queues. No, we are. We were just looking at them over here, as opposed to up here. So there's other things on the list that are not up here in the stratosphere that we're not scaled into that we would like to get into, right? So if I was saying to the newest person, I would still wait for a pullback. Not necessarily like, COVID ending pullback. Sorry, C19 ending pullback, the vid. But if like something like this, that's perfect pullback. Perfect pullback, right? What do I mean? A higher time frame, weekly, monthly pullback, a giant pullback, and then you see buying pressure step in, right? You see buying pressure step in. That is something that I would look to do, especially on the uptrend. On the downtrend, let's see if we can get something on the downtrend here, or just pull up a downtrend. Let's get some CL action. Yeah, perfect. So on the downtrend, it's almost as opposite, right? If you see a giant push away from moving averages, taking that buy, I'd say it's acceptable as long as you're okay with accepting the risk. Taking a buy like this, hey, it's been gone 1, 2, 3, 4, and it's far away from all of its moving averages. Take the buy, take the buy, take the buy, take the buy. I really say take the buy because if it's, especially if it's in a downtrend, that is the ideal time to take the buy. Okay. Also, something that we've been eyeballing, since it just popped up there, is BA. Speaking of taking the buy, right? Taking the buy in BA is really hurting. If you could see right here, a revenues call, it's getting absolutely thrashed. So we could go take a quick peek over here, look at our Qualtrum, and see what we have for the mighty BA and the aeronautics manufacturer for the U.S. Right, as it stands right now on the quarterly chart, it's down 25%. So it's a pretty big company. I think it'll be around for a very long time. One of two aeronautics manufacturers that are major ones for commercial travel that there are out there. But when you look at free cash flow, it's hurting. Free cash, it's hurting. So this is the time to look at certain companies as, hey, can they turn it around? Watch something like this, like a hawk. Why? Because this can make major bank over the course of like 5-10 years if the fundamentals start to improve, or let's say, for example, not wishing this on anything on anybody, but they're a major manufacturer of like warplanes. So let's say, for example, God forbid that happens, but conflict breaks out. These guys, this stock might absolutely take a rally. So don't count it out yet. There's been a lot of saber rattling around the world, and a lot of people are getting antsy. So it's just something to think about. Another one, I believe it's I'm on the wrong chart for you guys. I apologize. We're going to go RTX. Right. RTX Raytheon Technologies. Right. This is another one that we were eyeballing. It's been in a pretty strong uptrend, looking for this kind of dip to acquire. Now we've been basically waiting all year for something like this. Been looking at other stuff, but the time to buy would definitely have been lovely back here once it broke this kind of pivot range high. Started making market orders above here, and then really took off after that 3 weeks and slammed here, took off, right? Oh, you guys cannot see that. I'm so sorry. So again, repeating what I said, Raytheon, right? The best time to buy obviously would be right here. It's giving you an indication on the trend color change that probably a good time to buy. Strong uptrend here. 3 weeks of putting market orders at break of range hot, pivot range high, broke that, and multiple weeks of going sideways. The moving averages kind of started to catch up, specifically the 8, and then it took off from there. So what are we looking for? Definitely would love to see a break above the 8 period moving average and above the previous week for some Raytheon. But I think that move has already like come and gone, right? All this pushing has definitely I think it's the move's pretty much over. But if we can see some life bounce back in here, awesome, right? Speaking of war stuff, so those are the majors. Some of the other plays, and then we'll exit here. We already went over Boeing, XLE Energy. Actually executed a buy trigger, but a nice juicy pullback here for that. So this week broke high, broke the 8 period moving average, and a very very new kind of uptrend. Relatively, right? It has been in a uptrend as a relative to the 21 period moving average for a hot minute, but seeing this pullback and you're just like slamming through resistance zones, breaking through resistance zones, and then you find some support that could be powerful if all the sellers have basically got out of the way. So keep an eye on energy and keep an eye on financials, right? XCOM's in there as one of the leaders in energy, so no wonder it's potentially in this zone. And then on the sell side, and we'll end it here, guys. 6B. So with the indicator that me and Q developed, I'm really kind of excited for like 6C, 6B trading, stuff like that on lower time frames. As you can see here, on the 10-minute chart, definitely like when these like cross, it gives you very nice clean places to execute trades, right? Boom, boom, it kind of stays in that. Once it crosses green, takes a nice dip, pushes, takes a nice dip, pushes, so on and so forth. Like plenty of opportunities on a smaller time frame to take trades. That could be your edge, man. Just take it. After it breaks out, hits range high, you're done. Right, beautiful. Comes out, breaks out, range high, you're done. Comes in, dips in here, pops back out, take the trade, range low, you're done. Man, it's been repeatable for a little bit, and you start to catch, as you look at the charts more, you start to catch these certain nuances for potentials to take trades. So British pound is something that we like. The futures is something that we're starting to, the forex is something that we're looking to take on smaller time frames as we get a little bit more immersed in our systems and a little bit more comfortable with the assets overall. But guys, that's all the time we have for today. Thank you so very much for joining us. It's your boy Ben MC Fire. If you've been liking the systems we've been showing you, you think we're on the right path, go ahead and put a like or comment on it, and go check out some of our previous videos. We got a lot of juicy nuggets, not just trading videos, but lifestyle videos. We travel to Atlanta. I've got an Atlanta trip coming up here for the coming up here in the week on Wednesday, so I'll be taking some content for that, but just pray for me when you guys go in your house. Pray for me, that'd be greatly appreciated. I could really use your prayers, and thank you guys for joining us on the channel, man. We love to do this. This is definitely my passion, not necessarily my bread and butter yet, but it will be, so Lord willing. So thank you guys so very much. You guys have a wonderful day, and goodbye.